Hi everyone, hope you're all doing well, and today is the big reveal. I have started buying a new stock this week. I started buying it earlier this week, and this is the first new stock that I bought for, must have been over 3 months, and I've not bought any stocks in general for 2 weeks. So yeah, this is a big kind of event really. I've not really bought many stocks at the moment, building up the cash pile. Not really seen anything that I've really fancied at the moment, but yeah, finally, I have bought a new stock. I think it's the first stock that I've bought for 3 months. And I kind of teased you guys early in the week. I made this video saying 10 stocks I might buy. And on that list was the stock that I had bought. And today is the big reveal. And if you are on the Patreon, you do know what this stock is. And also, there might be a new UK stock I buy today. I'm still very undecided as I'm making this video, but I might pull the trigger on a new UK stock. But without wasting any more time, we'll do the big reveal, the new car, pull the sheet off, see which stock it is, and the new stock is Hims and Hers Health. So I have started buying this stock. Anywhere between the $7 to probably the $10 mark is where I'm very interested in buying this company. It is currently around about a 1.6 billion market cap. Now my average is something like $8.90, so I am slightly down on this one since buying it, but like I say, anywhere in this kind of $7 to $10 range is where I'll be very happy to kind of build my position in this company, hopefully in the coming kind of 3 to 6 months. Now originally this stock came onto the stock market through a SPAC, and it was about a year ago. It was about October time that it got announced that Hims and Hers was going to come onto the stock market as a SPAC stock, and it did very well. It had a very good run up on the stock. At some point, if you bought it very near to when the SPAC was announced, you're probably up over 100%. But since February time, as most SPACs have, as a lot of small market cap stocks have done, they've pulled back a huge amount from $24, and obviously we're down to $8, and you can see just a slow downtrend. It did have a little bit of a bounce up in May time, but even from there, the stock has gone down a little bit more and bottomed out around about the $6 to $7 range, and is recently having a little bit of a bounce back. And I thought, you know what, this is the time where I'm going to consider buying this one. Now obviously with me buying this, I can see this going from a 1.6 billion market cap company to somewhere around a 3 billion to 5 billion company in the next kind of 5 years, and that's why I'm considering buying this one. But if you do listen to the CEO, which is Andrew Dudum, very fantastic CEO. I've listened to a lot of interviews he has done before buying this stock and since after buying this stock, and I'm very impressed with him. And we'll talk about him in a little bit, but what is also very interesting, and this is credit of how good of a CEO and founder he is, this company was actually only founded in November 2017. So when we get onto the actual financials and you see that the growth they're putting in, the revenue they're putting in, and to think this company is only 3-4 years old, you can see here in 2020 they did 148 million. To get to them sort of numbers so quickly is very impressive. And if you actually listen to his targets personally, you'll actually find out that his target is actually to take this from a 1.6 billion market cap company, and his target is in the long term to get this to a 20 billion market cap company, which would be massive from here. You're talking about, a 10x opportunity. Now personally for me, he might do that. I like that he's ambitious and that's where he wants to go with the company, and I think he could do it with the success that he's had. But for me personally at the moment, in the next kind of 2 to 5 years, I do see at least 100% upsides on this one, potentially 200% upside. Now with this company, it came on my radar a while ago. It came on my radar when the SPAC happened, and then obviously it was going up and up. But then when we had this initial drop, kind of like round to this like $15 range, I had quite a few people going, oh, have you seen Hims and Hers since the SPAC? It's kind of pulled back. Are you interested in buying this one? And at around about $15-16, I wasn't too interested in buying this one. But the big thing that has happened since, earlier this year is that it's gone from there and now it's lost about half its value. So, from buying at $15 down to $8, massively interested in this one, because to them prices where people were asking me if I was interested, from here would be 100% in the stock price. So I knew about this one for a while, but the thing that I was just a bit unsure on was the valuation. But now the valuation is pretty much half since I first came on my radar. That got me straight interested in this one. And until that point, I was very more interested in Teladoc, which is a bit more of a bigger company. It covers a lot more different things in the telehealth service and is more focused on a B2B platform, whereas Hims and Hers is a bit more of a B2C platform. And now the valuation is halved. I actually like Hims and Hers a bit more than Teladoc because I think the upside is a lot bigger. I also like how they're expanding internationally. So one thing that this company has done is they've bought Honest Health, and that will help them expand to the UK and EU, which I think Teladoc have been a little bit slow to do. And I also like the growth. When we look at the growth in a second, you'll see that this company is putting in very good growth after the whole CV situation what caused the boom. Whereas Teladoc, I feel like a bit of their growth at the moment is propped up with the Livongo deal, whereas these guys are actually, there was no, I say they've acquired a few companies at the moment, but they haven't really come into the financial results yet because they only acquired them, I think it was either a month ago or 2 months ago. So even though this company is performing amazingly after the CV, there's no kind of companies they've bought that are propping up them financials, which is very impressive. Because when you look at this here, you look at the share price drop here, you think, what's caused it? Is it performing poor financially? And when we get onto that, no, the financials are very good. And in general, it's just one of those, the small market caps are being hurt. SPAC stocks have gone from the hot thing to massively out of favour. And I think as well, because this is a telehealth company, I think a few people have gone, they've only done well in 2020. They won't do very well going forward, and I have to disagree with that. I think they will do very well going forward. And when you look at the financials, you can see this wasn't just a freak year 2020 for Hims and Hers. It's actually looks like from 2021, it's here to stay for the long term. And you'll see here this stock came onto the stock market the 1st of October 2020 through the SPAC deal, or that's when it was announced, and it was going to be valued at 1.6 billion. You can see here, since then, it's still the same price. So basically you are saying from a year ago, the company's valuation hasn't changed. And that's the big thing. I'm looking at that going, well, in a year, when we get onto the financials, you'll see the valuation should be higher as well, because in the last year, they've put in some amazing growth. So that kind of past valuation kind of caught my eye a little bit. As well as that, you look here and you'll see this article here, which was done on the 29th of January 2019. So this is nearly probably 2.5 years ago we're getting to, and you'll see this was valued at 1 billion then. Now that was a bit of a richer valuation, I'm not gonna lie, but when you do look at that, it's 1 billion in 2.5 years, and since then the valuation's only gone up 600 million. And when you look at the revenue growth and the increase it has, once again, just past valuations standing out to me as being a little bit undervalued. And when we get onto what the company does, they have a few products at the moment. They are looking to expand their range as they carry on growing, but most of the products are based on subscription services and products which were maybe a little bit awkward to go and see someone about, and it might be a little bit easier to do it online. Also, products that are a little bit of that you don't really need to go to a doctor for. So the big thing here is telehealth services are going to grow a huge amount in the next few years, and I think only what 2020 has done is bring that growth a bit more forward. And I think over the next few years you'll see more and more telehealth services grow. And something like Hims and the products they do, which you would have to go arrange to go see the doctor, take time out of your day, and rather than doing that, all you can do is skip the trip to the doctor and just do it online. It saves a lot of time, it saves time for the doctor as well. And then as well, you just get the products sent to you easy. So they make it basically a lot of money from their subscription services that sell a few of these products. Now, a lot of these products, like I said, are more appearance-based, more for helping confidence. And if these products are making you feel better, or maybe like this product giving you a bit more activity, then if you are getting that, then you are probably going to keep using these subscription services, which is evidence if you go into the Hims and Hers investor relations that they do have a very good retention rate for people carry on using these subscription services. Now, what this company is targeting as their target audience is the younger generation, the millennials that are more used to going on their phone and getting their services from the convenience of online. Basically anything that millennials basically have got to the point where you want to kind of do things online. It's easier, it saves time, and that's what they're focusing on. And the more the millennials come through the generation, or the next generations that are more used to this service on demand, that is better for Hims and Hers. So their target audience at the moment is a little bit of a smaller target audience, but as that target audience grows and grows, they will do even better. There's no point going for a lot more of the older generation who are more used to that ability or used to the service of going to the doctor, queuing up, traveling to go get that health service. And the thing as well is, you look at a lot of health systems at the moment, a lot of the health systems are a bit of a nightmare to get seen to, whereas this is more described as having a doctor in your pocket and just saves you a lot more time and the convenience. And the healthcare side of it is a massive industry. You know, we talk about the healthcare industry, but in the whole healthcare industry, there's just these little segments that are billion-dollar markets. And the more that Hims and Hers expand into these billion-dollar markets, then they're going to just take little bits. You know, this isn't a company like a Teledoc that's going to cover massive amounts of markets. It's one of those that just go after the more of the markets where you just feel better, and also the just convenient side of it. And the more they tap these little markets, they'll do very well. And this is one of the new ones they're kind of going into, is the anxiety and depression, which is an area which is now getting more open and people speaking about that. But because people are more open and able to speak about depression, once again you talk about what effect that has on the normal health service when you can now have a doctor in your pocket, which is a lot more easier for you to get that help that you need. And dermatology is another part that they're interested in, 44 billion market, and that's going to be a massive growth bit with one of the acquisitions that they have just made as well. And if we go on to the company and what actual services you'll see here is these are the existing ones. So this is what really Hims and Hers was originally built on, was hair loss and ED. You'll see that these are kind of the new ones, which are current growth, the current growth of the company. And you can see here, these are the future opportunities and what they're looking at to enter a bit further down the line. So you can see here that as they add more expansions of the care they offer, this is obviously going to add more and more revenue, and the recent acquisitions as well will help with that. Now Hims is getting very aggressive now with the marketing side of it. They have recently announced a new partnership with Gronk. If you guys follow NFL, I'm sure you'll know who he is. If you don't, he's basically an American football player. And if any of you guys follow NFL, I don't want to talk about it too much after the Giants' performance last night. We're going to just go straight past that. And also they've announced a partnership with Miley Cyrus. As well as adding a lot of these marketing partnerships into the platform, they are also partnering with a lot of other companies as well. So one of the recent ones was Revolve.com. Love Revolve, love the Revolve stock and the gains I got off that one. So good to see something like that. And I believe they had another partnership with Urban Outfitters. Now when we go on to the recent earnings, this is what kind of got me really interested, because their recent earnings were so impressive, and I looked at the share price and thought this company just keeps going in the right direction. And it's just one of those classic where the company's performing very well, but the share price isn't moving in the right direction. So you'll see here that the top line rose 69% in their recent earnings, and also they raised their Q3 and also their full year revenue forecast the 69 million to 71 for the Q3 and 251 million for 255 million. And what else is really good with this company is a very good company, is kind of like sandbagging their numbers and saying, oh yeah, we're going to grow very slow, and then as the year goes on they keep upping the guidance as well, which is really good. It's better than kind of putting really high numbers out and then going, oh, we can't make them numbers. And these guys have done this huge. You know, originally I think at the start of the year Hims was only putting guidance out of 30% revenue growth, and now we're kind of getting towards 60% revenue growth, which is very good. And to kind of put in how good they're smashing these financials, you'll see here that they raised their guidance to 251 million to 255 million. And looking at the past numbers, you'll see the growth of 27 million, 83 million, 149 million to 251 to 255 million. And this company is smashing. You know, you look at that growth here, 209%, 8%, 69% to 71% revenue growth. Now, if I just go back to the original investor presentation when they were a SPAC stock, this is the change here. You can see the previous numbers, and you can see here they are absolutely smashing it. They predicted only 30% revenue growth. If we just flick back to the previous presentation here, 30% revenue growth to now 69% to 71% and 251 to 255. Now, what they were supposed to do is get somewhere around the 179 million range. So this company is even outperforming what they were projecting originally on their investor presentation for 2022. These guys are absolutely smashing it. Their financials are blowing their own predictions out the water. And this is just a credit of how from 2017, they've managed to grow this company to a company that could put in 250 million revenue in only 4 years. It's absolutely fantastic, the growth that this company's on. And it's a credit to the management team. They have a history of being very successful and nailing the numbers and nailing the services they offer. And if we go on to the recent earnings as well here, what's even more impressive is these gross margins. Look at this gross margins growth here. I mean, we can look at the revenue growth first of all. Let's not just point that out one more time, how good that is. 35 million 2020 to 60 million 2021. Look at the cost of revenue. Look at the gross profit here. 78% gross margins. Now, they have come out and said, I believe they're going to go down a little bit to 75%, but that growth is just really good. Really, really good. And you can see this company has a very clear path to profitability. Now, obviously, it's in its early stages, it's acquiring companies, it's spending a lot on growth and marketing, which you would expect. But you can say here, you know, one of the arguments about a lot of unprofitable companies is, yeah, but are they going to get to profit? And you guys, you can see this here. You know, you can see that they've increased their marketing from 11 million to 27 million. Their selling, general and admin, you can see it's gone to 14 million to 36 million. And that's a massive increase. But, you know, if it wasn't increasing that, you know, this company could easily get to profitability. So it just comes down to, would you want the company to kind of grow, you know, a little bit slower, or do you want them to carry on growing at the rate they are doing and take more market share? Because eventually, when it carries on doing this, it's a company that I can see getting to profitability. And you've got to consider as well, there's been a bit of marketing pushes at the moment with, you know, Miley Cyrus, Gronk and everything like that. As well as that, you've got to consider they've just done 2 major acquisitions as well. So that is going to take a toll on the financials. But a bit different to kind of Teladoc. I look at Teladoc and I always look, can they get to profitability? Maybe, I don't know. But I look at this one and go, you know, this could easily get to profitability. And they could be profitable right now if they wanted to, but they're not. And I think that's a really good decision from management. There was also a bit in here about the previous acquisitions of these companies that they did, the 2 companies that they bought. And the one thing that kind of really tops it all off, you know, you can see there's so many really good things going on with this. And yes, I'm still freeloading my charts. But this stock really, when I did it on Patreon, if you're a Patreon member, I did a screener the other week, and this stock really stood out as being so cheap. And when you start realizing the growth that they're going and that valuation drops and drops and drops, obviously, you know, there's no P ratio, they're not profitable, but on the PS ratio, you can see this is an 8. And after this year's done, it's going to drop all the way down to a 5, which is so cheap. And this is a big thing, you know, it's an amazing company. But the thing is now, when I compare this Hims and Hers, if I just flick to like a Teladoc, for example, it's a 10. A 10 for Teladoc. So, yeah, once again, you can see that this valuation to its peers is cheap as well. And also another one which is a little bit harder to compare, I guess, but Good RX, which is a 27 price sales ratio. So even compared to like its peers, it's very cheap. And once again, because of the growth they're putting in, which is all organic, you know, one thing that I said earlier, I believe Teladoc's been propped up a little bit by Livongo, and that's why it looks a bit better than what it is. Hims and Hers has all been organic because the acquisitions they've made hasn't come into the revenue yet. So yeah, this valuation is just so cheap. An 8 price sales ratio after this year, in a couple of months, you know, that's going to drop down to a 5. And then you're picking up a very good growth company for a 5 price sales ratio, which really does stand out as well. And going on to the performance, you can see here the losses. Like I said, I'm not too worried about that because I think if they really wanted to, they could get to profitability, but instead they're growing at a huge rate. I'm totally fine with that. And you can see the growth they're going to grow at, and you can see here analysts are predicting them not to carry on the growth that they are currently doing. I don't know, you know, I think they could potentially put another 70% year out. I think that what Hims will do is they'll probably guide for like 30% again, but realistically, you know, analysts aren't predicting too much growth, especially the year after as well. But you've seen how management have executed, so I think they could easily blow out this. And you know, they've also acquired the companies recently as well, which will also help with expansion. So I think these numbers here that analysts are predicting could quite easily get blown out of the water, like how they did previously. Financially as well, it's really strong. Look at the assets to liabilities, very good. No debt on that balance sheet, and you can see here it's got 317 million cash on the balance sheet. You know, this is a 1.6 billion market cap company. That cash is very healthy. And depending as well how much cash they decide to kind of go through, I mean, they've got a pretty good kind of at least 3 years runway through that cash as well. So yeah, I mean, I don't know if there'll be a bit of share dilution here, but very healthy from that point of view. Going through the management team, you can see here we do have a co-founder here. And you'll see as well, he does currently own 9% of the company and is the biggest shareholder in the company, which is great. And also when you look at the insiders, not really too much insider selling, as long as Simple Wall Street is correct. Sometimes it can be incorrect, and I have people shout at me in the comment section. But if you look at the inside of the company, you know, there's not any kind of selling. In fact, there's only buying as well, which is pretty impressive. So that's my video on hims and hers and me saying, look, I bought a new stock for the first time in 3 months. Hopefully there wasn't too much information on there. I know sometimes when I kind of do a lot of these deep dives and into the reasons why I bought them, some people shout at me and go, the video is too long, but you know, I kind of want to kind of put all that research that I did for you guys, and you know, there's probably about a good kind of 10-20 hours of research that I kind of try and fit in that video for you guys, and kind of just hopefully, you know, saves you guys kind of doing all that research. I know a few people don't like it, but personally for me, you know, if I'm kind of wanting to put an investment out here on YouTube, I kind of want to kind of show you why I'm buying it and the reasons why I'm buying it. So even if some of you guys, you know, let me know in the comment section, some of you guys might be like, oh, I really like that company. But even if some of you guys are like, oh, I don't really like this one, Jacob, it's not for me. But at least if I kind of like explain why I'm buying it, then you understand my point of view and where I see it going. You know, I don't want to kind of be one of those people that go, you know, every day like, oh, this is a new stock I'm buying, and then kind of just, you know, spend a 5-minute video on it. I want to kind of put my bull faces to you, and so you understand where I see it going in the next kind of 2 to 5 years. So hopefully it was useful, and like I say, yeah, I'm pretty optimistic on this one. Like I say, I think it's got 100% upside, potentially a bit more. And if you do listen to the CEO and founder, he potentially thinks it's a future 20 billion market cap company, which would be, if they do carry on executing like how they are doing, I could see it getting there. But I won't think that too far ahead, if you know what I mean. So hope it was useful anyway. If you could hit the like button for the information, that'd be absolutely amazing. If you're new and you found the video helpful, subscribe, and have a good weekend, and I'll see you all in a bit on the next video.